A big thank you to both of you for being here. Joe, I want to start with you. So take us into the mind of somebody who works on Wall Street, who's trying to figure out what their bank is offering when it comes to crypto. What are you thinking this week?
Look, I think the biggest selling point of cryptocurrencies is that the price has gone up a lot. And, there's, of course, all kinds of sort of technologically interesting things that people are attempting to do with, say, smart contract platforms. There are various ways that Bitcoin has been sold as a digital gold or an inflation hedge or something like that. But by far the biggest use case is making a lot of money in a short period of time. And that's, of course, what draws people in. And it's why Wall Street tends to come in sort of near the tops. And so, look, this is not the end of the story by any stretch. But, if the gains slow down or if you have major volatility, then at least in the short term, I think it makes that sales pitch to clients a little harder to make.
Hey, Joe, you have a story out today called Two Ways This Crypto Crash Looks Just Like the Last Peak. Can you explain sort of what you walk through in this story?
Two very simple things. One is the last peak, December 17th, 2017. CME futures launched December 18th, 2017, right at the same day of a major institutional adoption milestone. This time around, Bitcoin peaked on April 14th. The same day, Coinbase IPO'd on April 14th. Very similar institutional adoption milestone. Plus, you also have this effect where Bitcoin peaks before the alts. Same in 2017 and January 2018, same this time around. So there are similarities, even though we're bouncing today, between that crash at the end of the last cycle and what we're seeing this time.
Hey, Mike, come on in here. What do you make of the comparison that Joe draws between 2017 and what we saw in April with Coinbase and Bitcoin peaking in mid-April?
I appreciate the comparison, but what I see Joe is pointing out a correction within a fundamentally sound bull market. The big difference from 2017, the market was up 17x first. This year, 30%. It's nothing compared to normal Bitcoin bull markets. And what I really appreciate Joe pointing out, there's massive speculative excess in this space, most notably in things like Dogecoin, but look at things like Ethereum. It's transformational, it's changing the world, it's all going digital, and everybody knows it has to catch up on it. So to me, I look at Bitcoin, it's a bull market that's dipped, it's had a 50% correction, and all the fundamental underpinnings to me are stronger now than they were a few months ago, i.e. look at mining out of China, that's going away from coal. And then one thing that Elon Musk did point out is the massive use of electricity and energy. That's a sign of the strength of the network, and all that's going renewable because Bitcoin really favors that intermediate part of renewable sources of energy.
Joe, weigh in here. What do you make of it?
No, I mean, that's absolutely true. It's almost like a joke within the Bitcoin community that's like, China's banning Bitcoin, China's banning Bitcoin. There's like headlines about that every 3 months, and they mostly laugh it off. But there is an argument to be made, and many are making it, that it would be long-term positive if China were to push miners away, A, because it would lessen the environmental story, and B, by creating geographical dispersion of the mining, it adds to the decentralization characteristics of the network, which is one of its big strengths.
And what is the connection to the rest of the other asset classes that we're seeing on the markets?
Well, I can start with that. I mean, look, I think, Mike mentioned Ethereum and some of these other layer one smart contract platforms. A big part of those networks are built upon trading of the other coins. And so I think a big question going forward is whether some of these smaller coin trading fades away, if some of the froth goes away, and what that means for the demand for some of these platforms like Ethereum, at least in the short term.
Hey, Mike, I want to talk a little bit about your own personal and analytical outlook for Bitcoin for the remainder of the year. $50,000 price target, right? Still?
Oh, initially, no, it's up to 100,000 now. I just raised it. I mean, initially when we got to 50, it went too far, too fast. I have to admit that. And some of us got way too bullish. But now that we're back to these levels, and I see underpinnings only improving for this space. And one thing that Bitcoin is doing, it's transformational. It's it's not just a digital version of gold. It's a digital reserve asset, a world going digital. So the world's picking up on that. And the key thing to remember that's really happened this year is human nature has shifted. People realize now, money managers, there's a whole group of them at Morgan Stanley, that if they're not allocating some of their clients' money to this new space, if it just keeps doing what it's been doing for the last 10 years, they're going to look like idiots. So you kind of have to. Most notably, it's just fiduciary. If you're holding gold, you got to put some of that wealth into Bitcoin because it's replacing gold in portfolios. What's going to make it stop? I don't know. How about it just keeps doing some of the same that it has been forever? And that is mostly pushing the naysayers away, particularly when at corrections, which is when the naysayers really come out.
But Mike, you don't see the volatility, at least of late, with gold that you see with Bitcoin. And I wonder to what extent that potentially scares people away from adding an asset like this to their portfolios.
Oh, sure. But right before the correction, 60-day volatility and Bitcoin dropped to the lowest for the year. Bitcoin volatility right now, 260-day, the annualized is the same where gold was in 1980, the same where Amazon was when it was just around for about 5-10 years. Bitcoin's been around for 12 years. It's just getting started, and all that volatility is going down with greater depth. It's only going to probably happen most likely with higher prices. So put ourselves into the future, at least 5 years into the future. It either dies, volatility declines, or it just continues to do what it's been doing. ETFs, more depth, more knocking around with different types of derivatives. And that volatility is going towards gold. Why? Because the key thing about Bitcoin that's uncertain is only one factor. That's demand. Everything other asset on the planet, it's uncertain supply and demand.
Hey, Joe, what are you expecting this week? What should we be watching for?
Hard to know, obviously. I mean, we've seen this big bounce in the currencies from sort of this time yesterday to now. The question is whether people will be looking at some of these bounces to unload profits or not. And look, it's a fact. People are sitting on huge profits, especially in some of these alt currencies, life-changing fortunes, and you see it dwindle very fast. Maybe people want to lock in some of those gains. So we'll see how much this bounce can be sustained.
Mike, you do like to talk about this being the new version of gold, but I'm wondering about the idea of Bitcoin actually being used as a cryptocurrency, the idea of it being used to actually buy things. Does that story still stick to you?
It never really has. I look at Bitcoin as a collectible like gold. You're supposed to put it in your portfolio, put it away and forget about it, and only skim when you need, like gold. You don't use gold to pay your taxes, but you can with Bitcoin. That shows just how transparent and how liquid it is. That's never been able to happen in the history of the world. I mean, if you want to transport your gold, it costs a fortune. It's kind of hard to put it in your pockets. At Bitcoin, you can put it in your head or your thumb drive. That's, to me, it's what's changed in the world. And yes, I was a big naysayer 7 years ago, but now I've just learned it keeps getting hit hard and it comes back and it has something that's really like the internet. It's changing the world.
Joe, what do you think? Because if we think back to where we were in 2017 and even over the last 6 to 8 months, we have seen companies say that they will accept Bitcoin.
Yeah.
And it was a question that I asked Brian Niccol, the CEO of Chipotle, and he pretty much laughed at me when I asked him if he was going to start accepting Bitcoin for burritos. And he said, no, we're not even thinking about it. But at the same time, you do have, you had Elon Musk saying that they were accepting Bitcoin, and it sparked a conversation that it could be used to actually buy things. The fact that it can decline 30% in a single day, doesn't that change the story around the idea of using it as a currency?
I think Mike nailed it. And that is, gold has a lot of monetary value, but it's not actually used as a transactional currency except in very rare situations. And I think most of the times you see a company talk about accepting Bitcoin in transactions, it's mostly a PR stunt.
Mm-hmm. All right, good to keep in mind. Bloomberg's Joe Weisenthal, Mike McGlone, a big thank you to both of you for your time. Love talking crypto with you guys. Thanks so much for joining us.